All right, guys. So part two, welcome back, and we're gonna go over when to buy, guys. Okay, this is very specific to me and my system, and I want to basically go over a few different theories, a few different concepts, so you have a basic understanding and a basic knowledge about sort of my method to my madness and how I'm profitable when it comes to trading. Okay, so I want to first talk about market structure, guys. All right, this is very important. So in a market, guys, we typically have this sort of sequence, okay? We have a wave one that goes up, a wave two that comes down and retraces, a really big wave three. Notice how much bigger it is compared to wave one, okay? We have a smaller retracement in a wave four, and then a wave five that typically tops off this entire impulsive structure, guys. And you'll see this over and over and over again within markets, guys, over and over again. 5 waves within a structure every single time, okay? Um, now, I'm telling you this because once you can train your eyes into seeing 5 waves, you're going to be able to identify exactly where you want to buy, right? So within this wave one, of course, we want to buy at the wave two. After this wave three is finished, of course, we want to try to buy at the wave four level. Okay, this is exactly when to buy. All right. Now, within this market structure, guys, all right, within this market structure, okay, after the wave five, you'll get a corrective structure, A, B, C, coming down, guys, an A, B, C. Okay, and what happens after that? Okay, another 5 waves towards the upside. Another 5 waves towards the upside like this. And then, again, another 3 waves coming down. And then finally, another 5 waves going up. And so on, so forth, guys. So on, so forth. Okay. And the very interesting part is within this market structure, okay, you're going to get a wave. This is all of a wave one, all of a wave two, all of a wave three, 4, and 5, guys. So on, so forth. Okay. So I want to let you guys know that within 5 waves, there are smaller 5 waves. There's also a larger primary 5 wave, etc., etc. You're going to basically be sleeping and eating waves, 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 5 waves, okay? So again, let's go over it. Wave 1 goes up, 2 comes down, 3 goes up, 4 comes down, 5 goes up. After this, an ABC structure towards the downside, okay? An ABC structure towards the downside. All right. So the question is, okay, now since you've seen that, in theory, where do we basically buy? And this is where this very specific tool comes in, which is called the Fibonacci retracement tool. Okay, it's this sort of tool right here that you'll see on your TradingView or any charting platform, where you're going to basically take the bottom, the very wick of whatever it is, all the way to that top structure. All right, all the way to that top structure. Okay, and typically when a wave one goes up, wave two comes down. The wave two typically comes down to at least the 618 level here, guys. You see how it's retracing 61.8% of the price. Okay, this is typically where you want to buy, guys. This is typically where you want to buy. This is called the golden ratio, the 0.618 to the 0.65. And the reason why is the banks, guys. The banks have this algorithm put in place where after wave one impulse, based on their algorithms, when it retraces 61.8% to 65%, their robots and their bots start kicking in to buy this flush or a huge wave three impulse. Okay. And what happens within this is that it could reach down to 786, okay? This is typically where you see the most buying, whether it's the 618 or the 786, okay? You want to buy this, all right? You want to put your stop loss either under the midway of the 786, around this level, between the 786 and the 0.88. Or if you think you want to be a little bit more conservative, you can put the stop loss under the 0.88. Okay. A stop loss is basically saying if the trade goes deeper and deeper and deeper, if price goes deeper, it starts to look pretty bearish, guys, right? This might not look like a wave 2, wave 3 because it's really deep. If it's too deep, it looks pretty bearish and we can fall down like this and it ends everything, right? So you want to have a stop loss in place to make sure that, if your theory is incorrect, at least you have a stop loss to mitigate any losses, okay? So put a stop loss underneath the 786 or the 0.88, okay? Now, after this, guys, a wave 3 happens. Wave 3s are typically the biggest impulsive structures within a wave structure, guys. All right, when you hear the news of, oh, wow, NVIDIA is going up tenfold or Palantir or something, a huge sort of, everybody in the world knows about this company because it's doing so well. Yeah, that's typically a wave 3, guys, that you hear about. All right. So you, of course, want to always go in at the 0.618 to the 786, buy, stop loss underneath some of these levels, and then ride the wave all the way up to wave 3. And now wave 4 comes, guys. Wave 4 is basically a wave where it sort of consolidates towards the right side, okay? Not a lot of dip, all right? It won't go dip like this, like 786 or the 618 like wave 2s. Wave 4s are typically, not too deep, and it typically retraces to the 0.236 or the 0.382, guys. So I'll show you here, 0.382 and also the 0.236, guys. All right. So either wave 4 will drop to 236 or typically 382. If the wave 2 fell to 618, it's going to retrace to this 382. If it retraced all the way to the 786, wave 4s are typically going to retrace to the 0.236, guys. But this is what you will find, majority of the time, 382. So you want to buy within these levels, guys. Stop loss under the 50, okay? Or if you want, midway 382, okay? So either or, you want to buy wave 4 and go up for the wave 5, all right? So that is basically how you buy, guys. That is the buying structure when it comes to these impulsive structures, guys. All right. So you want to basically be able to identify wave 1, 2 coming down, buy the 2, 618, 786 retracement, ride it all the way to wave 3 when it comes consolidating down, 236 or the 382. Okay. Now the difference between wave 2s and wave 4s is that on a wave 2, you'll have an A, B, C structure like this. Okay, A, B, C. Okay, you'll have an ABC structure like this, a 3-wave structure, 1, 2, 3. A coming down, B going up, C coming down to that 618. For wave 4 structures, guys, because you won't see a big retrace, you typically get a more tightening pattern of an A, B, C, D, E, guys, all right? This sort of looks like a flagpole, right? You get this pole here and then a flag, right? Sort of like a channel here, sort of, okay? Like this. And then you'll go up for the wave 5. All right, so you want to start buying at the 236 at the end of wave C, or the 382 at the end of wave E potentially, right? For that chance to go upwards. Okay, so I hope this has really helped basically give you an idea of the market structure, right? You'll see 1, 2, 3, 4, 5 every single time, no matter where you go. This is what you'll always see. And again, remember, guys, after this is done, this whole thing is a wave 1, right? You'll see a wave 2 now coming down to the 618 or 786, and then wave 3, 4, 5, same thing. So after this whole structure is done, right? Now you take the retracement of that entire structure from the bottom all the way up to the wave 1, and look here, you're going to buy the 786 to the 618 of this structure here, right? Within this wave 2, you have an A, B, C coming down, guys. So on and so forth. This is exactly every single time what you're going to do. All right. That's how the market is every single time. That's how the banks are doing it. They're figuring out all the different algorithms within all these wave structures, guys, for you to basically understand. Okay. Now, interesting enough, within wave 1, you're going to have same thing. 5 waves. Wave 3, same thing. 5 waves. And then wave 5, same thing. 5 waves. Okay. You have mini waves within mini waves within mini waves. All right. And then all of this again, it's the wave 1 coming down for wave 2, 3, 4, 5. Okay. That's basically how it is. All right. So that is part 1, guys, of when to buy. So again, you're going to buy, you're going to take the retracement tool. You're always going to buy at the wave 2, 786 up to the 618. Right? Buy here. And then for the wave 4s, you're going to take the fib retracement from the second wave, guys, not all the way down here. From the second wave, wave 2, up to wave 3. Okay. And you got the 0.236 to the 382. This is where you're going to buy for wave 4s again. Okay. And then wave 5 going up. And you're going to sell at the top of wave 5. Okay. So in the next video, let's talk about more about selling and when to sell and more of this ABC structure, guys. Okay. We're going to talk about more about this ABC structure. Okay. And go into depth on retracements. All right. Talk to you guys soon. See ya.